Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into the world of corporate filings. Today we're cracking open a report from Latch Incorporated, and trust me, it's not just about unlocking doors, even though the company name might suggest that. There are surprises inside, maybe some good, maybe some not so good. Latch filed a Form 8K, which is basically a corporate AO or Attaboy report, telling investors about important events. In this case, it's about filing their delayed financial results from last year, which is always a bit of a red flag. This report summarizes their performance for 2023, and we will take a look at some important results. So, the big news is that Latch finally released its financial results for the missing quarters of 2023 and the full year. This is important because investors need this information to make informed decisions. The company has now submitted what they call the 2023 filings, which includes those late reports on Form 10K for the first 3 quarters and the annual report on Form 10K for the whole year. Basically, they've caught up on their paperwork. To summarize the financials, the company issued a press release. This is important because it gives us a quick snapshot of how Latch performed. We'll focus on the numbers that matter most and what they tell us about the company's health. Now, before we dive into the numbers, let's talk about something called adjusted EBITDA. This is a non-GAAP financial measure. What that means is that it's not calculated using the standard accounting rules. Companies use these measures to give a different view of their performance, often highlighting the good stuff and downplaying the not so good stuff. In this case, adjusted EBITDA takes the net loss, then adds back things like stock-based compensation, depreciation, interest, taxes, restructuring costs, some legal expenses, losses from paying off debt early, changes in the value of certain financial contracts, and expenses from acquisitions. The company believes this adjusted metric gives investors full information. Huts, now that we're on the same page, let's dig into those numbers and adds back things like stock-based compensation, depreciation, interest, taxes, restructuring costs, some legal expenses, losses from paying off debt early, changes in the value of certain financial contracts, and expenses from acquisitions. The company believes this adjusted metric gives investors useful information. Stock-based compensations, the company believes this adjusted metric gives investors useful information. That we're on the same page. Let's dig in. Unfortunately, as the company just caught up with its reports, this report does not contain any numbers or financial reports, but references the 2023 filings. So what does all this mean for Latch? Well, the fact that they had to delay their financial reports in the first place is a concern. It suggests there were problems behind the scenes, maybe with their accounting or internal controls. Now that they finally released the numbers, investors can start to get a clearer picture of the company's financial health. Looking at Latch more broadly, it's clear they're in a challenging position. The delays in financial reporting eroded trust. To regain investor confidence, Latch needs to be transparent about its challenges and demonstrate a clear path to profitability. The business model of the company could be a weakness if it can't be profitable and faces strong competition. It will be hard to survive. In conclusion, Latch has some serious challenges to overcome. The delayed financial reports are a major red flag, and the company needs to demonstrate a clear path to profitability to reassure investors. It's a company to watch closely, but with a healthy dose of skepticism. Thanks for watching. If you found this corporate decoder breakdown helpful, please like, comment, and subscribe for more deep dives into the world of corporate filings. Let me know in the comments what company you'd like me to decode next.